Shares of Gildan Activewear were also on the move today on news that it could be closing in on a deal. Equities reporter for Bloomberg, Stephanie Hughes, joins us with more on that. As Stephanie, did investors like this news?
You know what? It seems like it was a mixed reaction from the investor and analyst community, and I think that's what sent Gildan Activewear shares down as much as, or by nearly 10% at its lowest point. That was its biggest drop since April. Like you mentioned, it was based on the Financial Times reports that Gildan Activewear, the Quebec-based activewear company, could be closing in on a deal to acquire U.S. underwear maker Hanes Brands. The report added that there might be an enterprise value of about $5 billion. Now, there aren't a lot of details around this potential transaction, and in fact, it isn't quite confirmed yet, but it was enough to send Gildan into the red. On the flip side, Hanes Brands jumped by as much as 40%, which was its biggest intraday gain of all time. So TD Cowen analyst Brian Morrison said that if this deal were to go through, joining the brand power behind Hanes Brands and the low-cost structure of Gildan Activewear would be a powerful combination. Other analysts were also supportive of the idea, saying that with comments ranging from it being a logical fit to it potentially being a global leader in basics clothing. Now, one thing RBC Capital did mention that the news surprised them, given that management's previous commentary was more so focused on prioritizing capital returns. So it's possible that's what's kind of throwing some of the shareholders of Gildan off today. But again, we're just going to have to wait till this is confirmed and to see what it ends up looking like, Marella.
Okay, so let's talk about Cineplex stock as well. It jumped after new earnings. We did have the CEO on the show, but give us the investor's perspective here.
Yeah, so it was up by over 5% at its highest point. That was its biggest jump in, I believe, just over a month. And while the EBITDA missed the mark, analysts saw the results as being mixed, with some actually commending its revenue growth year over year, its ability to generate strong revenue. TD Cowen's Derek Lessard was probably one of the most forgiving analysts in this time around, saying that the results were strong across the board and that it was really a restructuring charge that chipped away and took some of the top line shine off of EBITDA. So Lessard added that the theatrical performance was really driven from releases like Jurassic World Rebirth, Superman, and that new Fantastic Four movie. So a lot of superhero movies, some dinosaur movies, really driving the gains there. And Cineplex's revenue came in at nearly $362 million, which was enough to come ahead of what analysts were expecting. So traders seem to be reacting to Cineplex's resilience, especially in an environment where they're competing with streaming services and they've been beaten by the pandemic, but been able to kind of regain some of that theater operation space. So that's probably all that working in tandem, putting it back into the green today, Marella.
Got it. All right. We have Bloomberg's Stephanie Hughes giving us the latest on the markets and the TSX. Thanks for that.